Hello everyone, welcome to Brilliant Bankers. In today's session, we'll be discussing about the cards, that is chapter 2 in the certificate examination in digital banking. So here we will be discussing everything about the cards, about its evolution, history and evolution, what are the type of cards that are being used in the market, or what are the types of cards that are being issued by the banks, and their futures and the backend operation of these cards. So coming to the history and evolution, these banking cards, they refer to a variety of plastic or the digital cards that are provided by the financial institutions to facilitate the financial transactions and offering user convenience and accessibility to the customers. So it can be defined as a variety of plastic or digital cards that are provided by the financial institutions for facilitating financial transactions. So what was the main purpose of this? The primary purpose of these cards for being provided was the convenience and being a secure means for the users to access and manage their funds, reducing the reliance on the physical currency. So once these plastic cards came into evolution, the carriage or carrying of the cash was reduced to a point. The use of cards in the banking system has a rich history because it started very early, somewhere in the year 1928. So we will start from it. The charge sheet card. This was the very first card. In 1928, a banker named the John Bickens introduced the charge plate in the Brooklyn, New York. So it was called the charge it card. It was made of aluminium and featured the customer's name and address also. Merchants would imprint the plate with the transaction details whenever a customer used that card for a purchase at a local merchant. So whenever there was a purchase, since it was an aluminium plate, whenever anyone goes for a purchase, that was being imprinted behind the card. So whenever a customer used that card for a purchase, a local merchant charges was forwarded to Biffin's bank, where the reimbursement for the same was being done, and the retrievement was done from the customer on the submission of the card. So initially the card was used for purchase, wherein the shopkeeper imprints the details, and later these details were sent by the shopkeeper to the bank, and the Begins Bank used to reimburse the shopkeepers, and the Begins Bank used to take the transaction details again from the customer and take the amount that was to be charged for the use of this card. So this was the very first card that is called a charge card, and it was in total aluminium. Then came the Diners Club card that was in the year 1950. This was introduced by Frank McNamara and Ralph Schaedner and is considered the modern credit card. This was the very first modern credit card. It was also a charge card that allowed users to make payments at various restaurants and at entertainment venues. So the very first credit card that was in use came in 1950, and this was called the Diners Club card. The Bank America card. What is it? It came in the year 1958. Bank of America launched this card. So this was launched by Bank of America. The name is there in the card itself, Bank America. It was launched by Bank of America in 1958, marking the beginning of the mass market for the credit cards. This was later that which evolved into the Visa card. So Bank America was converted or later evolved into Visa card. Again, Master Charge evolved into the MasterCard. So Master Charge came in the year 1966. This was done by a group of banks that was formed under the Interbank Card Association to compete with the Bank America. So a group of banks to compete with Bank America, that is a Visa card, on the later days started a new card that was called a Master Charge. So they introduced the Master Charge, which eventually became the Master Card. So what is a magnetic stripe technology? These were introduced in the year 1970s. The introduction of the magnetic stripe technology in the 1970s revolutionized the card transactions. It allowed for data storage in the card on the magnetic stripe on the backside of the card, which was enabling the faster and more secure transactions. Then eventually came the debit cards in again in the 1970s. Debit cards came almost with the magnetic stripe technology only. Debit cards emerged as a new form of payment that is directly linking the cardholder's bank account. Till now, everything was a credit card. Till now, everything was credit, that is, everything was purchased and the payment was done on a later date or a later basis payment. But as and when the debit card came, these cards were linked to the cardholder's bank account. So they allowed for a point of sale transactions and also for a new thing that was called a ATM withdrawal. That also came into evolution in the same period. EMV chip cards. EMV chips. This was started. What is a EMV? It is Europay, Master, and Visa. This is the full form of EMV or the abbreviation of EMV, Europay, Master, and Visa. So EMV chip cards. This was a collaboration that was developed by all the three to start a new technology of chip card technology. The microchip embedded in the card enhanced the security by generating the unique transaction codes for each use, reducing the risk of fraud when compared to the magnetic stripe technology. The first debit card or of the ATM and the pin for use of the POS was done in the year 1980, and the debit transactions with signature was done in 1988. So we are discussing about the debit cards and the EMV cards together. So the first debit card with ATM and pin transaction was used in the year 1980. That was used in POS, and the debit transaction with a signature was done in 1988. So EMV chip is Euro, Pay, MasterCard, and Visa, wherein all the three came into contact and directly brought out a new technology of the chip cards. So what are these contactless and mobile payments? These started in the year 2000s and it is still on. It's also the case of the biometric authentication. So contactless and mobile payments. The 21st century saw a rise of contactless payments like the near field communication, NFC technologies for quick and secure transaction, wherein a user can just tap his card and the payment is being done, which you can see in RuPay cards nowadays also. And then comes the biometric authentication. I don't think that I have to explain what is mobile payments. That is all the payments that are being done by GPay, PhonePay, the Beam technology, use of UPI. All these are in the mobile payments. Biometric authentication. The biometric authentication, some modern cards and payments systems incorporated the biometric authentication such as fingerprint or facial recognition. You can see in different ATMs that you do have a biometric authentication system which is not being used in India, but such were being used or can be used. This is mainly for the use of the people who are blind, wherein they can't see the numbers so that they can use their biometric for authentication and for their security. So what are the different type of cards that are being used in the market? So before going to what are the different type of cards, so we'll come again to that. A payment card is usually a plastic card, which is used for the electronic payment system. The most common being the credit and the debit card. All these have a ISO standard size, which is 85.60 mm to 53.98 mm. This is the exact size of each and every card that is being issued on date. And the main reason for this being, it can be kept in a wallet. And all these have the ISO standard has the mentions of the dimensions, the mechanical strength of the card, the electrical properties the card should hold, like that of the magnetic strip technology, and also the chip card technology, so that all the cards can be used across in all card slots in the ATMs and the POS machines, etc. So the different cards in use are the credit card, the debit card, ATM card, the prepaid cards, the charge card, and the virtual card. Now we will go through all the cards in detail. So what is a credit card? These credit cards allows user to borrow money up to a predefined credit limit that is set by the issuer based on the cardholder's credit worthiness. It also uses the revolving credit facility, which allows Users to carry a balance from month to the month, paying interest on the outstanding balance. That is by paying the minimum amount due. That's a mad amount, which is the minimum amount due. Users can, the credit card holders can pay a small amount, which is due. That is a minimum amount, and they can keep revolving the credit of that card for the next month also. Then comes the often these cards come with rewards, cashback, and travel benefits. Whenever you are using a credit card, you can see that there's a lot of cashback offers or the rewards that you get from these cards, like a 50% discount. You also sometimes get a cashback for any purchases, and also you have travel benefits. That is, whenever you are booking some kind of travel, you have a discount in that. These credit cards also help in making purchases at merchants that accept credit cards for online transactions and also for cash advances at ATM, which is also at a higher interest rate, and also with additional fees. So whenever you are withdrawing some cash using the credit card, be aware that the interest rate for this is at a higher level. And once the cash has been withdrawn from the card, the interest is used for the all the limit that has been entitled in the card. Coming to the next card, that is a debit card. These are directly linked to the cardholder's bank account. So only if you have some amount in your bank account, these cards can be used. Transactions are directly from the linked bank accounts, so that no major amount is being deducted, and there is a daily spending limit. It can be used for making purchases at merchants that accept the debit cards. So wherever the credit card is being accepted, in each and every place, on date, the debit card is being accepted. It can be used for ATM withdrawals, that is withdrawal of money, and cash transactions at a point of sales terminal. Coming to the next card is the ATM card. ATM card primarily used for ATM transactions, and it has a limited functionality compared to the debit cards. ATM card is not a debit card, but a debit card can be used as a ATM card. ATM card can be used only for ATM withdrawals or for knowing the balances in the account, and to a limit at the point to sale transactions. The other type of cards are the prepaid card, which is of three types. There is a closed system prepaid instrument, the semi-closed system prepaid instrument, and the open system prepaid instrument. So a prepaid card is divided into three types. There is a closed system, semi-closed system, and the open system. A closed system prepaid instrument is always preloaded with a specific amount of money, and it's restricted for the use with particular merchant or a group of merchants. That is, whenever you're using a closed system prepaid instrument, you can say that you are taking it for a gift card. An example is a gift card from any bank. And if that gift card is for the purchase of any particular item, that is for particular purchase of jewelry, you can only purchase jewelry. If it is for any particular clothes, you can only purchase clothes. Other than that, few banks and other offices are being issued with a card called the Sodexo card, which is also a prepaid card, which has been renamed as Fluxy nowadays. So here you can use it for only purchase of food items. So this is a closed system prepaid card or a prepaid instrument. This cannot be reloaded. This cannot be reloaded at any time other than by any separate entity. Any subscriber or a customer cannot reload it again as his account is being reloaded. Semi-closed system PPI. They are preloaded with a semi-specific amount of money that is normally usable at multiple and affiliated merchants. It can be reloadable. It is accepted at a range of affiliated merchants within the semi-closed system only. So what is an open system PPI? It is the most versatile than the semi-closed systems. It can be used for a variety of transactions, that is including the online purchases, and it is reloadable. It is generally used in general spending, or it is almost equal to that of the debit cards. The final three type of cards are the stored value cards, the charge card, and the virtual cards. The stored value cards hold a specific cash value, which often used for public transportation, tolls, or specific services like that. The cards that we are using in the metros, it can be reloadable. It can be used to indent such as transportation in metro. Uh, Cards are being issued in the Delhi for all transport systems. That is for use in DTC, for use in the Delhi metro, and all these things. These are the type of stored value card. What's a charge card? It is similar to that of the credit card, but requires full payment of balance each month. So in credit card, you can pay the minimum balance due, or in the case of charge card, full amount is to be paid and no interest is charged as long as the balance is paid in full. Whenever there is a balance difference in the payment done, there is a difference in the payment. And making purchases with the requirement of full payment on due date. This is the main use of that. What is a virtual card? It is not a physical card. It exists only in a digital form, often used for online transactions to enhance the security. It may have a short validity period. And the main uses of a virtual card is online purchases, temporary or one-time transactions for added security. So whenever you are using a virtual card, you don't have a card in hand, or it's not a physical card. It's a temporary online card or online number that is being issued for any one-time transaction, so that it is a totally secure thing. Each and every type of card caters to different financial needs and preferences, providing users with various options that are based on their spending habits, financial goals, and the level of security they require. So, the different type of cards that we have gone through are the stored value card, charge card. The prepaid cards are of three types: the closed system prepaid card, the semi-closed system prepaid cards, the ATM cards, the debit cards, and the credit cards. So these are the different type of cards that we have gone through. So what are the benefits to the customers in the use of cards? Cards, those including the credit cards and the debit cards and other types, offer a range of benefits to customers, like that of the convenience, wherein the cards provides a convenient and widely accepted method of payment, allowing customers to make purchases at various merchants both in person and online. Cards also reduce the needs for carrying large amount of cash, which enhances the security and reduces the risk of loss or threat. Many cards, especially the major credit cards and debit cards, are accepted internationally. That is, they have a global acceptance. This makes it convenient for travelers to make purchases and withdraw cash in different countries. Credit cards can serve as a source of emergency funds also. In unexpected situations or during financial emergencies, the customers can use their credit cards for their necessary expenses. Credit cards often come with reward points, offering cashback, points, or miles for every purchase. So, what is miles? Whenever you are booking any air ticket using a credit card, you get an extra mile option. This was there, I'm not so sure whether it is still available. It was there till 5 years back in India. Therein, customers can benefit from these rewards by redeeming them for discounts, travel, or any other perks. It is also responsible while using a credit card. If you are using it responsibly, it can contribute to building a positive credit history. This in turn may lead to better credit scores, which can be beneficial for obtaining loans of favorable interest rate in the future also. Credit and debit cards typically come with fraud protection features. Customers are often not held responsible for unauthorized transactions, therefore, provided they report them promptly. And in online shopping cases, cards facilitate secure online transactions, enabling the customers to shop from the comfort of their homes. The added security features such as the CVV codes and the authentication protocols also enhance the safety of the online purchases. They can also budget and do the tracking, wherein the cards provides detailed statements that help customers track their expenses. This feature aids in budgeting and financial management also, as users can review their spending patterns and identify areas of adjustment wherein to be needed. They can do the contactless payments. Many cards nowadays support contactless payments, allowing customers to make transactions quickly and securely by tapping. their cards and by using the mobile payment options, wherein the NFC technology is being used, the touch and go technology is being used, the mobile payment technology is being used, using the phone pay, GPay, extra. ATM access. Debit cards also provide access to the ATMs, allowing the customers to withdraw cash and check balances and also perform other banking transactions whenever necessary, like changing your contact numbers and all these details or transfer of funds. There is also interest-free period in the case of the credit cards because they often come with the interest-free period, that is 45-day period, allowing customers to make purchases without incurring interest if the balance is paid by due date. That is, if you are good in using a credit card, you do get that interest-free period wherein you can purchase something and have a 45 days period for payment of the same. So it is important for the customers to use card responsibility, understanding the terms and conditions associated with each type of card to maximize the benefits and avoid potential pitfalls such as the high interest charges or fees, which comes with the case of the credit cards also. So what is PCI DSS? The Payment Card Industry Data Security Standard is a set of security standards that has been developed to protect the sensitive payment card information. These standards are designed to ensure the secure processing, storage, and transmission of credit card data during the financial transactions. PCI DSS is a collaborative effort of major credit card companies like the Visa, the MasterCard, the American Express, Discover, JCB. All these are mainly based in America. Uh, as you know, Visa and MasterCard, you also get American Express card in India. Discover and JCB are cards mainly in US. To establish a common framework for securing the payment card data. Coming to a more detailed explanation, it helps to build and maintain a secure network by installation and maintaining a firewall to protect the card data or the card holder's data. It also develop and implement firewall and router configurations that restrict unauthorized access to the card holder data. What are the different configurations that come in with that? It do not use the vendor supply defaults for system passwords or other security parameters. Vendor provides you with a password wherein you change the password. So this password is being secured in the PCI DSS system, wherein the vendor is not sure about what your password is because you keep on changing. And the changing of default passwords and settings to secure the configurations because you keep on changing the password and it is a need to secure your data by changing the password in regular intervals. It also helps protect cardholder data by encrypting the transmission of cardholder data and sensitive information across the public networks. By using the encryption for data storage, particularly for stored card data, cardholder data. It can be used for data masking also. That is a mask pan, the primary account number, when displayed to personnel or users who do not have a need of full access of the card. By maintaining a vulnerability management program and giving regular updates on this by the use and regular update antivirus software or programs, develop and maintaining the secure systems and applications by applying security patches in a timely manner and also by conducting security scans, conducting them regularly to get the vulnerability scans on the systems to identify and address security vulnerabilities. They also implement strong access control measures by restricting access to cardholder data based on the business need to know basis. Also assigning a unique ID to each person with a computer access and also giving an authentication which implements strong authentication measures including the user IDs, passwords, and a two-factor authentication. That is a 2FA. What is a two-factor authentication? The first factor will be your password, and the second factor can be either your biometric system or a OTP that is being sent to your mobile. That is a two-factor authentication. And also giving the physical access control. It also restricts the physical access to card holder data and secure areas where the data is stored by regularly monitoring and all these test networks. Track and monitoring all access to the network sources and cardholder data They use the login mechanisms and regularly review logs for the suspicious activities also. They also maintain an information security policy. By establishing and maintaining this type of policy that addresses information security for all persons, and it clearly defines and communicates the security policies and procedures to all the employees by training them, by providing security awareness training to all personnel to understand the importance of the protecting the card holder data. So all in all, PCI DSS is a compliance level are determined based on the number of transactions a merchant processes annually. These compliances involve self-assessment questionnaires, external security assessments by the qualified security assessors, they are the QSCs, and network vulnerability scans. Normally, the non-compliance may result in fines, penalties, and restrictions also on the ability to process the credit card transactions. Overall, the PCI DSS is crucial for maintaining the security and integrity of payment card data, instilling the confidence in consumers, and also reducing the risk of data breaches in the payment card system. We have some more slides. Let's continue. If you think that this video is being fruitful, please do not forget to subscribe and like the video, which will give us some more energy to bring better videos of the same kind. Please do like, subscribe, and share our videos to a bang of friends. Coming to the topic, magnetic card and EMV technology. We have already discussed what is a EMV technology. It is a Europay, MasterCard, and Visa technology. So magnetic card and EMV technology are two different type of technologies that are used in the payment cards, providing varying levels of security for the transactions, wherein we can see on an overview what are the features of a magnetic card. A magnetic card can have a data storage system, that is the information is stored on the magnetic strips that is found on the backside of the card, and it also contains the statistic data including the cardholder's name, card number, and the expiration date on the magnetic strip that is found in the backside of the card. It also has a security concern wherein the magnetic strip cards are more susceptible to cloning and skimming processes where unauthorized individuals can copy the card's information from the magnetic strips. The static authentication, the date or the data on the magnetic strip remains constant for each and every transaction. These are the reasons why a magnetic card is not that secure, and nowadays the EMV cards are being used, or the evolution of EMV cards have come into a widespread thing. Still prevalent in many areas and widely accepted globally. The magnetic cards are still prevalent and are accepted globally, commonly used in the card present transactions where the card is physically swiped through the card reader. Coming to the EMV technology. The EMV technology, these features the data storage, they have dynamic authentication system, they have an increased security system, they have chips and pin or the chip and signature facility, they have a global acceptance also. And there was a transition from the magnetic strip to the EMV. So coming to the features of the EMV technology, it uses a microprocessor chip embedded in the card to store and process data. The chip generates a unique transaction code for each purchases, enhancing the security. It also has a dynamic authentication. Unlike the magnetic stripes, EMV chips provides dynamic authentication, meaning that the information sent during each transaction changes. It also increases the security by significantly reducing the risk of cloning and skimming. Because risk of cloning and skimming was in the case of the magnetic strip, but not in the case of the EMV technology. So EMV technology makes it more challenging for fraudsters to create counterfeit cards. They don't say that it is not possible, but it is a bit difficult when compared to the magnetic strip cards. Coming to chip and pin or the chip and signature facility in the EMV cards, EMV cards may may require to use a pin or a signature for additional authentication. The use of pin adds an extra layer of security compared to the signature only version. Wherever you are using a EMV card and just putting on a signature. Nowadays, you don't use it. Nowadays, it's only the PIN, chip and PIN facility that is being on. Chip and signature was used in the earlier days, but nowadays it's only chip and PIN. That is all each and every person are suggesting also for our own safety. There is a global acceptance of the same, becoming a global standard all through the adoption rate varies from region to region. And it also promotes a more secure environment for both card present and card not present transactions. There are times where you use the card and without card also transactions are being done. In that case, a EMV card is of a better thing. The transition that there was from magnetic strips to EMV cards. Why did the transaction take place and how? The migration process, wherein many countries have been transitioning from the magnetic strip cards to EMV technology to enhance the security and reduce the fraud that are being conducted due to the cards. The liability also. In some regions, a liability shift has been implemented, making merchants responsible for fraudulent transactions if they do not support the EMV card. So when the merchants are not using a EMV machine or a EMV or not accepting the EMV cards, it was easier for them to take the data from the magnetic cards. So all the frauds were being complained on the merchants, and they have started shifting to EMV cards because of this liability of holding them responsible for any fraud that was being done. The contactless and the mobile payment systems. EMV technology has also paved the way for the contactless payments, allowing users to tap their cards or mobile devices for quick and secure transactions. And also the advancements in the EMV technology, which continues to evolve with the ongoing efforts to improve the security and addressing the emerging threats. So, in whole, we can summarize that while magnetic strip technology is still in use, EMV technology represents the most secure and advanced option for payment cards, especially in regions where its adoption is widespread. The shift of EMV cards to provide better protection against various forms of cards contribution to a safer and more secure payment of this environment. So let's see what is a magnetic and a EMV technology card. What are things in a magnetic and EMV technology card? All these data is as per the ISO or IEC 7813, and this is the ISO code for the EMV cards. So what are the things that you have in a EMV card? Coming to the front part, you do have a EMV chip. You also have a contactless logo. You have a EMV chip. You have a contactless logo which can be used as a card for no contact payment. You have an indication whether it's a domestic card or an international card. You have the card holder logo. And nowadays, the name has been shifted to the back end. In the back end, you have the magnetic strip, which was even available earlier. It's still available in EMV cards. You have a CVV number that is being mentioned. You have the international partners who are partnering the card. You have the card number in the backside, the expiry date of the card, the card holder name, and the hologram of the card issuer. Let it be Visa, the Rupee, or the MasterCard. The example shown is a Rupee card, which is of the latest type. So with that, we come to the end of this today's session, wherein we have seen about all the different type of cards and all other details. Any questions or queries on today's session? Please feel free to put them in the comment section. Do not forget to like, subscribe, and share our channel, The Brilliant Bankers. This is Nishan signing off. Thank you. Have a great day.